Hello and welcome to today's morning report on Friday the 29th of January with me, Japan Market Analyst at Handset Markets. European trading sessions got off to a positive start, and we've had a surprise easing from the Bank of Japan overnight. They moved into negative interest rates. Now, no one saw this coming. The possibility of extending quantitative easing was on the table, but no one really expected the Bank of Japan to go negative on its interest rates, down to 0.1% negative. The yen has certainly weakened off the back of this, and it sort of engages into a new avenue that the BOJ have got in terms of monetary policy, in terms of easing anyway, and the yen has significantly weakened, down 1.5% against the dollar. My chart of the day, which I'll talk about, is the sterling yen. It's also sharply weaker against that. So just generally speaking, the yen is very weak. The oil price is another story today, continues to move higher, and we've got the continued recovery in the oil price, which is just generally helping risk sentiment, isn't it? Against on WTI and also Brent crude as well, both of those pushing higher. Now, the easing measures from the BOJ does sort of mean that it's arguably sort of harder for the states to tighten monetary policy because of the measures of the BOJ. So we've seen yields sharply lower today. Yields on the 2-year back at levels not seen since early November. So a real decline there in the expectations of further monetary tightening in the States. In terms of the dollar, we've had yesterday we had the dollar weaker, but rebounded slightly today as the euro has just come off a bit. But it's very interesting, the moves that we're seeing on the euro, and I'll talk you through those in a bit as well. So lots going on in these financial markets. In terms of what we've got to look forward to today, well, we've got the crikey, wrong chart there. We've got the Eurozone inflation data at 10 o'clock. Now, this is the flash data, so it will be certainly looked at and certainly be, in fact, impacting on the euro. 0.4% is the expectation, and that would take it back to levels not seen since sort of October 2014. So that would be an improvement in inflation. And then you've got the advanced reading of GDP for the States at 1:30. That's expected to be. Let me just get rid of that. That's expected to be coming in at 0.8%. So that would be a disappointing number, I think you'd find, especially whereby the Q3. This is the advanced reading of Q3. The final reading of Q3 came in at 2.0. So that would be well below where it was at the end of Q3. So the growth in the States continues to slow down, and that is at 1:30. The expectation, as I said, 0.8%. And we've got at 3 o'clock the final or the revised reading of Michigan sentiment, and that is expected to be 93.1 or 93.0, depending on where you get your expectations from. And this is the unfortunately, as I said previously, the Reuters data shows you the final reading of last month, which was 92.6. Now the flash data came in 93.3, so that would be a slight downward revision of the prelim data there. So 93.1 is the expectation there. So a couple of bits of data that are not expected to be all that strong for the dollar today. So my chart of the day, as I said, is the sterling yen. And what we have got is this sharp increase in sterling yen. Now, I was looking at sterling yen yesterday, and I was going to do it anyway, because I sort of noticed this base pattern breakout, which I'll show you on the hourly chart, which actually comes through quite strongly on the move above 170.60, completed yesterday. Pretty much bang on that neckline, but today we've had that sharp move to the upside on that Bank of Japan. Now this base pattern gives us an upside target of around 176, which is still way above where we are here. So you've already had the strongly improving momentum indicators with the RSI giving a buy signal, the crossover MACD signal, the strong stochastics as well. Across the board, positive moves on this sterling yen. So I was going to talk about this anyway, and it just so happened overnight we had this move from the BHA. But still, you can see certainly here that base pattern we've got here above sort of 170 is the sort of beginnings of it, but then up towards 170.60 is sort of 60 pips worth of neckline support, you'd argue, and that was being used yesterday, and we sort of strong gains overnight today, but big volatility as well is notable. That the market didn't really know what to do, because obviously it was a very big change of monetary policy. Now I've stuck the crosshair in here. You can see 171.15 was yesterday's high, and that was actually the recovery. The correction low on the sterling yen chart. So before we saw the move back higher again. So we're very strong on the momentum. And it still seems as though you got further upside in terms of the daily chart. So I'd be looking at using any of this sort of unwinding move that sort of just helps to just unwind some of the overstretched near-term momentum on the RSI and the MACD lines as well. I'd use any weakness as a chance to buy on this sterling yen, because it certainly looks as though it's going to be going higher. Strong technical setup across the daily and hourly charts. So as the sort of initial reaction unwinds, I think you're going to see further gains in due course. So I wish you good luck in your trading on sterling yen today, and I will speak to you later.